Did you know that the IRS made several changes that can affect your tax return? That's what we're going to talk about in this video. Hello from Freedomtax Accounting. We're an accounting firm where we have been providing quality tax and accounting services now for over 20 years. Here at Freedom Tax, we can help you with your personal and business taxes, and we can do tax returns for individuals and businesses in all 50 US states. As mentioned, the IRS has made several changes in their tax code, and now that it's time to file your 2022 tax return, you may see that these changes will affect your tax return. In this video, we're going to discuss 7 changes that the IRS made this year that will affect your 2022 tax returns. 5 of those changes are positive, and 2 of those changes are not that good. And you want to stick around to the negative part of those changes because one of those negative changes will affect many tax filers this year. To talk about this, I'm going to bring my coworker Robert. Robert Acevedo is our head tax preparer here at Freedom Tax Accounting. How are you, Robert?
Carlos, I'm fine, thank you. It's a pleasure to be here with you today and discussing all these changes.
Very good.
Give out this great information.
Robert, how many years of experience you have now?
Well, I'm glad to say over 20 years we have been doing taxes, and it's always, it's thankfully we have a lot of experience with tax returns, and we have one more year of this. Very excited for this upcoming tax season.
Very good. So, Robert, yes, as mentioned, the IRS has made several changes to their tax code, and
Mhm.
these changes will affect taxpayers when they file their 2022 um, tax return. Okay.
Mhm.
As
That's right.
mentioned, there are 7 changes that we're going to discuss in this video. Let's start with the 5 positive ones, and then let's take a look at the 2 not so good changes that will affect taxpayers.
Okay,
So,
sounds great.
starting with the 5 good IRS changes, number 1 is that the tax filing due date is now April 18th. Now,
That's right.
why is that good?
Well, because it gives us an extra 3 days, to file our tax returns. That way we don't have to.
Exactly.
Usually April 15th is the well-known deadline day. But this year, because the 15th falls on, I believe, a Saturday, the IRS then cannot have the final day be on a weekend, right?
Okay.
So they move it to Monday, but even Monday, the 17th, is not the deadline. The deadline is Tuesday, the 18th, because up north, the 17th is a holiday in
Okay.
the Northeast of the United States. So the IRS always pushes it even one more day until the 18th, and it's just extra time, for our friends out there, to gather, their documents and not leave it till the end, but at least we have 3 extra days to get our filing done on time.
Perfect.
Mhm.
So, the second good change that
Yeah.
the IRS made this year that is going to
Mhm.
affect in a positive way taxpayers is that their retirement contribution limits have increased.
That's right.
So, why is this good for taxpayers?
Well, for any taxpayer, we want to have our taxable income as low as possible, right? Um, and one of the ways that we can achieve this is by contributing to a retirement account,
Okay.
like a 401k or an IRA,
Okay.
right? And these type of accounts help us lower our taxable income. So
Okay.
it's definitely a good thing that the IRS has raised the maximum amount that's here that can be contributed up to 6,500. um, but you have to make sure that that contribution is made before April 15th. Well, April 18th, right? A
Okay.
lot of people are under the misconception that you have to contribute before the end of, in this case, 2022. No, you actually have to contribute before the end of the before tax season ends, before the deadline of April 18th. So definitely, it's a great thing when the IRS allows us to lower our taxable income, and this is one of the ways.
Okay. So they can basically contribute towards their 401ks and their
Mhm.
IRAs, and both of those limits have increased.
That's right. The 401k limit has been increased up to 20,500,
Okay.
right? And the limit for the IRS has been increased up to 6,000, and that's an extra thousand if you are over 50, over the age of 50.
Very good.
Hmm.
Well, the third change that the IRS has made that will affect positively taxpayers is that the
Hmm.
standard deduction is higher now for 2022. So
That's right.
why is this good for taxpayers?
The same theme of being of we want our taxable income to be low as possible,
Okay.
right? The standard deduction is an amount that the IRS gives any taxpayer based on what's called their filing status, right? You file single, if you're married, if you have the dependent, you might file as head of household. Well, these filing statuses come with a set amount that the IRS automatically allows any taxpayer um, based on their filing status. So to keep obviously we've all known, and I would imagine we've heard in the news that inflation is up, right? Everything is more expensive. So the IRS, to keep up with inflation, they every year raise the standard deduction amount, and this year they followed suit.
Very good.
Hmm.
So the fourth thing that is a positive change for taxpayers this year is that the income brackets are also higher compared to
Correct.
last year. So why
That's
is this good?
Well, because they what that means is that with the income brackets, with them raising right the brackets every year, also it's also tied to inflation. While the IRS raises its brackets also to help us pay have a wider margin to for example, the lowest tax bracket is 10%, right?
Okay.
And then it goes up to 12, 15, and so forth. So by them raising it, it means that our income is going to be more in that 10% bracket before it gets to the next bracket.
Okay.
Bottom line, it helps us pay a little bit less tax when we file our return.
So basically, you can earn a little bit more and
Correct?
still be in a lower tax bracket.
Correct. And a little bit more income that's going to remain in the 10% bracket, for example, or 12, or
Very,
before it goes on to the next one.
very good. So another thing that is going to be positive for taxpayers this year
Hmm.
is that many cryptocurrency investors may take advantage of their losses, right?
Correct.
So
Hmm.
why is this good?
Well, because when you know where an investor knows that they're if they sell the asset like cryptocurrency in this case, well, that loss can be useful in their tax return to help reduce, again, their taxable income. Lower taxable income means less tax due. So it's just a strategy, a tool that specifically the IRS is applying to cryptocurrency for this year that could help somebody out there listening to us lower their taxable income.
Exactly. And since cryptocurrency is way down in 2022,
Hmm.
and
Yes.
also the stock market is down,
Hmm.
anybody who sells crypto or stock may do tax loss harvesting,
Correct.
and then that will lower their taxable income.
Correct. Hopefully, this would have been something that they would have already done, right, or sold this stock or crypto before the end of 2022 by December 31st. But
Exactly.
something to take advantage of with the return.
Okay. So those are the five positive changes that will affect taxpayers this year. So now let's take a look at the two negative changes that the IRS has made that will affect taxpayers this year. The first negative thing
Hmm.
is that there are no more above the line charitable contributions.
That's correct.
So why is this
Or
bad for taxpayers?
Okay. Well, since we've been talking about what's been the theme, taxable income, right?
Yeah.
Well, this is a deduction that the IRS gave over the last several years where it was a deduction that you could take without having to document, right?
Okay.
Your donation. Right? The IRS over the last several years allowed every taxpayer to take this deduction of $300 per taxpayer, and it was just a tool to be able to lower again our taxable income. Lower taxable income means less tax. Fortunately, pretty much this year for 2022, things are going back to normal, right? Normal being
COVID.
pre-COVID, pre-pandemic, and a lot of the benefits, or a lot of the, you know, yeah, benefits, things that the IRS was doing to help us out are gone,
Are gone.
right? So one of this was this charitable, above the line charitable contribution. It's done away with. It doesn't mean that we can't um, take our deduction for our donations, right? But now it has to go the traditional way, right? On what we call Schedule A, itemized deductions.
Okay.
And that is not a guarantee to be able to help us.
Okay. Very good. So
Mhm.
also now, this
The big
is
one.
the big negative thing that we've
Yeah.
seen that already is affecting a
Yeah.
lot of taxpayers.
Hmm.
Unfortunately, we're seeing, and a lot of people get prepared because their tax refund is gonna be lower this year. That it may be lower this year
Yeah.
than the past couple of years. Why are we seeing that the tax refunds are lower?
It's sad to say, but it's a reality. Yes, last year it was the total opposite, where we saw refunds higher than normal, right? But that came because of benefits, or special deductions, right? That the IRS applied specifically to tax year 2021. Like what, right? So, for example, many of us know about the COVID-19 stimulus payments, right? That began in 2020 and 2021. Those are gone. So no more stimulus payments in the tax return. Okay? So that's one reason. Another thing, for those of us who have dependents, who have children, children are most children under the age of 16 and under are eligible for a credit called the child, a very well-known credit called the child tax credit. Traditionally, this credit has been $2,000 per child, 16 and under. Last year, the IRS had bumped it up to 3,000 per child for those children from 5 to 16-year old, and 3,600 for dependents from 5 and below. That's gone away with. It's back to the normal $2,000 per child. So that's definitely affect a lot of taxpayers. And then also the earned income credit has greatly been reduced, especially for those taxpayers who file single. Earned income credit is a credit that can also, a lot of times, it's meant for lower income taxpayer who have children, right? And it's a credit that last year had been bumped up, but even for those who file single and their income falls within a certain range, they could qualify for this credit. They still can, but it's much lower.
Wow.
So these are things that we've seen. And also another credit having to do with the children is a dependent care credit. When you are working and you pay for childcare, right, while you're working or after school, there's a credit for that. Last year, it had been raised up to a maximum of 8,000 per child.
Wow.
This year, it's back down to 3,000. So we see that it's definitely big amounts, big differences from last year, and that's definitely led from the past 2 weeks. We've seen much lower refunds than we saw last year.
Yeah, basically, people need to understand that these credits were raised the last 2 years
Hmm.
because of COVID.
Exactly, they were meant to help out, help us out because of a lot of people were struggling with COVID.
Exactly. But now that the pandemic is over, then
That's right.
basically now these credits are back to their normal
To their normal, yeah, to
their
the what they
normal
were
amounts.
pre-pandemic.
It's not that they're lower, it's just they're going back to their normal amounts.
That's right. That's
Okay.
definitely right. So, what we're just trying to, put it out there for us to be aware, so that we can have a realistic expectation when we file our tax returns.
Very good. But obviously, there's a lot of tax strategies that can be implemented, and that's the reason why you should do your tax return with a tax professional. Here at Freedom Tax, we have more than 20 years of experience. We can file your taxes in person or virtually via email, WhatsApp, Zoom. We can help you in many ways. We can do your corporate taxes. We can do your personal taxes. If you would like a coupon, a discount coupon, go to freedomtaxfl.com. And for more information, call 407 344 1012. So, Robert, thank you. And let's
Thank
have
you,
a good
Carlos.
tax season.
All right.
All
See you
right.
soon. Bye
God
bye.
bless you guys. Bye bye.